Faber, editor and publisher of Gloom, Boom and Doom Report. Now, I mean, it's all very well looking at regulation and tightening up the transparency of CDSs, and I understand why we need to tighten up, but this is kind of missing the point a little bit about the real problems here. Mr. Papandreou and his government has admitted there were statistical inaccuracies over a long period. They've got to address that. It's almost a low-hanging fruit. Get your statistics back online, get independent auditing of those figures. They can do that. That'll get some credibility back. But the fact remains is that the only reason why these CDS guys are able to make hay is because this is a country which is so much at the behest of the markets because of their extraordinarily high debt levels. This is the real point, not regulation of the CDS market, isn't it?
Yeah, I agree. I think in general now everybody thinks that we need more regulation. I think we need less regulation, but what we need is regulation that makes sense. And my point is, if there were real interest rates that are high, you wouldn't have all the speculation that we've had over the last 10, 15 years. And so, again, I'm going back to easy monetary policies of the Fed in the United States that has essentially encouraged speculation on an incredible scale worldwide. And they have also introduced moral hazard by bailing out already 1998 LTCM, and again by bailing out AIG. I think AIG should have gone bust. And then the whole derivatives market would have shrunk. But each time you bail out someone, and that's a form of regulating markets, you create unintended consequences. It's like, why do we have such a horrible housing market? Because Fannie Mae and Freddie Mac encourage speculation in real estate indirectly.
There's nothing wrong with having low interest rates per se, though, Mark, and I'd rather live in a world where I could borrow at 2 or 3% rather than one where I could borrow at 6 or 7. And basically, it's just about the moral hazard aspect, I think. I mean, as long as you tell people that if you have borrowed too much and you can't pay it back, then you will suffer consequences.
Yeah, absolutely. I agree with you. Let's say in a corporate world, we have free markets, we have a capitalistic system, and some companies survive and other companies go bankrupt. And the same should be with governments. If a government can't pay, then let them go bankrupt. Why would one bail them out?
Yeah, absolutely.
And then some investors will suffer, and some investors who bet on the bankruptcy of the governments will make it. That's fine.
Let's move you on, because I want to deal with some of the viewer emails, and they're asking specific questions about assets. Robert writes in to us and says, can you ask Mark to give us his views on euro, dollar yen and gold from here? Prices.
I wish I knew. I mean, I took the view on November 25th when the euro went over 151 that this was a false breakout and that the euro would then correct on the downside. Then we went to 134, and now we rebounded to over 137. We're at 136 something today. I think the dollar may weaken somewhat more against the euro to maybe around 140, but thereafter strengthen again against the euro. Because I'm a believer that the EU will bail out Greece, and then they'll have to bail out others. So again, it's kind of a monetization process, and therefore I don't regard the euro as being a significantly better currency than the US dollar, especially not at this exchange rate level. I mean, I traveled to the United States recently and to the EU recently. I mean, in America, outside New York, Los Angeles, San Francisco, you can find a perfectly nice hotel for like $130 US, a perfectly nice room. That you can't find in the EU. So I think the price level in America, also in terms of real estate, is now reasonably attractive. So I rather think that the dollar may appreciate somewhat. Against the yen, I also think that the dollar will appreciate. And against the other Asian currencies, I think that the dollar will rather depreciate further, because I think eventually the Chinese will let their currency appreciate somewhat more. Not so much under the pressure of the United States, but I think they will recognize that it's for them more desirable to have a currency that is slightly stronger than it is at the present time.
And I know the viewer was asking about gold, and we have an email in from John asking about gold as well. Can you ask your guest if he thinks currency debasement will necessarily lead to much higher gold prices? Could Bernanke & Co. manipulate gold prices?
I don't think they can manipulate it. I think we already have now a gold standard. It's not an official gold standard created by central banks or governments, but by the marketplace. And the marketplace assigns gold a certain price every day. We have the ETFs that have proliferated, and we have more and more physical buying of gold. Now, will gold always go up? I mentioned earlier on that in periods of rapid and accelerating inflation, you have to shift assets back and forth. So between 2001 and 2008, you had to be in gold and out of equities, basically, because gold outperformed currencies and bonds and equities. But in 2009, last March, in other words, a year ago, you had to go back into equities and avoid gold, because since then equities have performed much better than gold. Or gold and the S&P bottomed both out on February 5th of this year at 1,045. Since then, the S&P has marginally outperformed gold. So there are times when equities will do better than gold. But as a normal investor who isn't able to move in and out of assets consistently and rightly, I think to hold gold is the right thing to do.